we've touched on financials slightly, but someone's asked, banks have performed badly for quite a while, although the dividends have been good. Do we see a reversal of this trend anytime soon? And I think even before we started recording, we were saying there's been this running narrative since, 2009, that banks are better capitalized and so on. Is there something that will kind of push that recovery through?
I think that's right. I think what we saw clearly in the financial crisis was a massive shock to the system and a massive crisis. And regulation's much tighter now. Banks have lower leverage, much more conservatively financed, and they are starting to generate a lot of cash. I think during the 2010s and teens, a lot of that cash was used up for PPI mis-selling claims and other cost pension fund deficits they were funding. So the cash didn't always flow through to shareholders and dividends. We then had the pandemic and dividends were cut back again. But now we're coming out of that. And actually what you're seeing is the banks are very prudently financed. They're generally earning significant cash flows. They're not having to plug holes in their pension funds or historic liabilities. So they're generating strong cash, paying dividends. And as Tineke said earlier, like the energy companies, they're doing a lot of buybacks as well. So the free cash flow generation of the banking sector is very strong. And clearly they're macro sensitive. So there is a risk if the economy slows down, but they've not been aggressively lending into commercial real estate and areas where there are some concerns in the market. They've been actually quite conservative in their lending practices. So we think the domestic banks look quite interesting, particularly some of the smaller banks as well as the big ones.
I'd add to that one specificity we like about the bank sector is that not only they keep paying dividends now, post the pandemic, etc., and this dividend recovery has materialized, but also, unlike other sectors, we expect dividend growth going forward. And so this combination of high dividend yield plus high dividend growth is a nice combination that we like to look at, and we find it in very few other sectors. I mean, that would be true about energy, but other sectors, perhaps like staples are less, have less that growth aspect. So I think that makes us quite confident that this is a better area. Although,
I'd like to be devil's advocate.
Excellent.
Banks are very cheap. Their balance sheets look, really strong and solid. Agree completely. So a big turnaround since the financial crisis. However, we look forward and there's the domestic banks and there are the Asian banks in the UK. So if we talk about the domestic banks, the hint is in the word domestic. So what happens in the UK economy is very important. What happens in the UK mortgage market is very important. So the UK market compared to other mortgage markets around the world has the highest number of quite short-term mortgage products. So apologies for any listeners, but so if your 2-year or your 5-year fix comes up, and instead of paying 2%, you're paying 7%. That's really painful. So what we're seeing from the bank results that had a very tough Q3 is that they are seeing fewer new mortgages. Not a surprise. And they're seeing also less refinancing. I mean, if what you would tend to do is you pay as much off of your mortgage and then you refinance, you have a lower base. So typically newer loans are more profitable. Refinancing is less profitable. So your margin goes down. So that is on that lending bit, and therefore there's not much lending growth, and the margin is less. There's less profit. And then on the other hand, we are now living in a higher interest rate world. So what we've been seeing every month, there's lots of money flowing around from accounts that earn us very little to time deposits or higher savings rates. And obviously banks need to balance their deposits with their loans. And therefore, in order to keep a certain number of deposits, they have to pay more. And that also, so our view is, yes, they're conservatively financed, but we think that rates probably stay at a higher level and their profitability is going down. So you will get your dividend unless there's big blow-ups, and banks do have a history of having other mis-sellings that we don't know anything about. But assuming that doesn't happen, then we think they might just tread water, but you get the income, but the profitability is going to go down. And the risk is that the UK economy does start seeing a bit more, people not paying their loans back, because at the moment it's been quite benign. And therefore, if we're starting people not paying their credit cards or going into bankruptcy, that will hurt the banks as well. So we think there's better opportunities